Hey guys, it's James from the Chart Guys. It's Tuesday, September 20th. Going to do my nightly review of oil. Again, I'm going to mention this equilibrium pattern we've been in, and I'm going to keep mentioning it until we break out of it one way or the other, bearish or bullish. So after this recent low and this recent high, we've been in this equilibrium pattern of setting a higher low, lower high, higher low, lower high. And we are maintaining a higher low by not breaking under the low of this pattern of this candle, which is at $43. I was watching $43 closely today because we got really close. We got 6 cents within it, and we showed up right at 43.06 and defended that as this line in the sand right on time. And you can see they did it on pretty strong, solid volume here, on increasing volume. So that's a good sign for oil bulls, them defending the $43 low of this candle. If we break under $43, then we would have established a lower low, and we are breaking out the equilibrium pattern bearish. So we closed under the 50 MA still here, but at 6 o'clock Eastern Standard Time, 6 p.m., oil future markets open back up, and you can see we're currently above the 50 MA. Bulls ideally want to close above the 50 MA, which is currently at 44.63. Look for a test of the 20 MA, which is currently at 45.32. We also have $45 psychological price resistance level. And with oil inventories tomorrow, if the price is close to the middle Bollinger Band and 20 MA at 45.32 around 10:30, then watch for how the price reacts to the inventory. A rejection there would mean that we are going to head back down probably to test the 50 MA and possibly the 5 MA here, the green line, or a bullish inventory report and a bullish move could take us above the 20 MA. And a close above the 20 MA on the daily would be really bullish for some continuation for oil bulls. So on the hourly, I mentioned that once oil bulls lost the 20 and the 50 MA here, you saw acceleration to the downside. Then you saw a back test of the resistance and rejections, more downside, rejection at the 20, more downside. Couldn't hold the 50, downside, and then we had this kind of a fake out where we got above it, but we weren't able to hold it and accelerated down, and we got really close again. We got down to 43.06, close to that $43 must hold level. And currently oil is above the 20 and the 50 MA. We do have a golden cross here where the 50 is crossing above the 100 MA. Again, when a shorter term MA crosses above a longer term MA, that's a bullish signal or indicator, as long as the price is above both those MAs. So the price is above both the yellow and the yellow MA, which is the 50 MA, and the mint colored MA, which is the 100 MA. And currently our resistance seems to be the 200 MA, which is at 44.89. So watch for the 44.89 price and how oil reacts to it overnight. We have a long night ahead of us. Again, storage numbers come out tomorrow at 10:30, so anything could change. We also have Bank of Japan and FOMC. So tomorrow's going to be a very volatile day. Doesn't hurt to be all cash and wait until markets settle down after all the economic news to see how to play commodities and the markets. So have a good night, and I will see you tomorrow.